Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section A3. This is an application topic. Prepare the statement of cash flows for the proprietary funds of a state or local government. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then after that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to the full 10-question versions of these 5-question YouTube videos. So again, in today's YouTube video, we're only going over 5 questions, but SuperfastCPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member. Now, with all that said, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Under GASB standards, which of the following proprietary funds are required to present a statement of cash flows? Now, in the previous couple videos, we've talked about what proprietary funds are, so if you don't really know, maybe go watch those previous couple videos. But which one of them has to have a statement of cash flows? Is it enterprise funds and internal service funds? Or is it one or the other, or is it neither? If you don't know the answer, that's okay. We are using these questions to learn about the statement of cash flows for proprietary funds. And again, enterprise funds and internal service funds are the proprietary funds. So are they required? If you don't know, that's okay. We're going to look at the answer together right now. All right, here we are. The answer is A, enterprise funds do have to have it, and internal service funds do have to have it. So we're learning here, all proprietary funds have to have a statement of cash flows. Let's go through this. Both enterprise funds and internal service funds are classified as proprietary funds. GASB requires proprietary funds to prepare a statement of cash flows following a format similar to businesses in the private sector, but using the GASB specified categories, and those are operating, non-capital financing, capital and related financing, and investing. So those are the 4 categories of the cash flow statement when it comes to proprietary funds. GASB requires the direct method for proprietary fund SCFs, or statement of cash flows, and a reconciliation of operating income to net cash from operating activities. So again, we are using the direct method when it comes to these proprietary fund statement of cash flows. This applies to both enterprise funds, which, as a reminder, are for external users, and internal service funds, which serve other governmental units. So very simple, very basic concept right there. We are learning that, again, proprietary funds, all of them, and that includes enterprise funds and internal service funds, require the statement of cash flows to be reported. Now with that, let's go to the next question. Okay, here we are at question 2. And something I always like to point out when it's an option, it wasn't really an option in question 1, but here you want to read the last sentence of the question first. I've heard it called the stem of the question, or however you want to call it. Again, you want to read the last piece first because very frequently that will give you context and an understanding of what you're supposed to be looking for throughout the rest of the question. So let's do that here. Based on GASB standards, how should these cash flows be classified in the statement of cash flows for the enterprise fund? Let's go up to the top. A city's enterprise fund reported the following cash transactions for the year. Cash received from customer billings, $4,500,000. Cash paid to suppliers and employees, $3,200,000. Cash received from issuance of revenue bonds, $1 million. Cash used to acquire new equipment, $600,000. Cash received from interest on investments, $50,000, and cash received from a federal operating grant, $200,000. So based on all these different cash transactions, how are they going to classify these different cash transactions in the statement of cash flows? So how much is going to be in operating, how much is going to be in non-capital financing, how much is going to be in capital and related financing, and how much is going to be in investing? Now, if you have an idea about how cash flow statements typically work, you might have a general idea of how this will go. But if you don't know, that's okay. We're going to use this question to learn a little bit more about the different categories for the statement of cash flows for proprietary funds. So let's go ahead and go to the explanation. All right, here we are. The answer is C. Operating activity, $1,300,000. Non-capital financing, $200,000. Capital and related financing, $400,000. Investing, $50,000. So let's go through this to understand how we determined what went into each of the activities. So operating activities include customer receipts and payments to suppliers/employees. So anything that has to do with that, so the $4,500,000 that they got from customer receipts and the $3,200,000 that they paid to employees, you net those, and that gives you $1,300,000 of net operating activities. Non-capital financing activities include federal operating grants and similar support. So federal operating grants are things that are similar to that. That's going to be a non-capital financing activity. So that was $200,000 of that federal grant that was given. Capital and related financing activities include proceeds from revenue bonds, and that was the $1 million, and equipment purchases, and that was $600,000. So you net the two, and that's $400,000. And sorry, this is a little bit confusing. I realized that there are parentheses around this when there should not be. So they earned $1 million from the revenue bonds and they purchased $600,000 worth of equipment with cash. So the net is $400,000 for capital and related financing activities. And by the way, we are going to dive a little bit more into each of these different categories: the operating activities, the non-capital financing, the capital and related financing, and the investing. We're going to talk a little bit more about those in the following questions. But just to finish this up, investing activities include interest earned on investments. So they had $50,000 of interest. So again, overall, operating $1,300,000, non-capital financing $200,000, capital and related financing $400,000, and investing $50,000. This classification highlights how proprietary funds follow GASB's four-category approach. Remember, that's what we're talking about here, which differs from the FASB model used in the private sector. It's a little bit different. We're not going to talk about that right now because that's more of a VAR topic. But again, there's four categories when it comes to the proprietary fund statement of cash flows. We went over them there. Now let's go to the next question. All right, here we are at question 3. What is the net cash provided by operating activities for the year? So we just talked a little bit about this in the previous question, so let's see how we can do here. During the year, a city's enterprise fund reported the following cash transactions: cash received from customers, $6 million, cash paid to suppliers, $3,800,000, cash paid to employees, $1,400,000, cash received from issuance of revenue bonds, $2 million, cash used to purchase equipment, $900,000, cash received from a federal operating grant, $300,000, cash received from interest on investments, $50,000. Somewhat similar to the previous question, but again, we are only focused on the operating activities here. So let's take what we learned in the previous question and try to apply that here. Pause the video if you need to do the calculation, and when you're ready, come back. We'll look at the answer together to see how you did. All right, here we are at the answer D, $800,000. That's going to be the operating activities. So let's go through this. Only transactions related to day-to-day operations are included in operating activities. So cash received from customers, $6 million, that's included. Less the cash paid to suppliers, that's subtracted, and less cash paid to employees, and we learned that in the previous question. So again, $6 million less $3,800,000 less $1,400,000 gives you $800,000 of net cash provided by operating activities. And the other transactions are classified differently. Revenue bond proceeds and equipment purchases are capital and related financing. Again, we're kind of getting the idea of all four of the activities from this, even though we were focusing on operating activities. The operating grant is non-capital financing, and interest income is an investing activity. This distinction ensures the operating activities section reflects only the core business of the fund. So again, operating activities, core business functions, typically if you think about it that way, that will get you in the right area. Now with that, let's go to the next question. All right, here we are at question 4. What amounts should be reported as non-capital financing activities and as capital and related financing activities in the statement of cash flows? So we're focusing on 2 of the activities in this question. A city's water utility enterprise fund had the following cash transactions during the year: cash received from a federal operating grant, $400,000. Cash received from issuance of revenue bonds to finance new treatment plant, $2,500,000. Cash paid for construction of the treatment plant, $1,800,000. Cash received from customer billings, $6,200,000. Cash paid to suppliers and employees, $4,700,000, and cash received as an interfund transfer to support operations, $300,000. So based on what we've learned so far, you might have a general idea of how you would calculate this. So if you want, give this a try. Try to think about what would be in the non-capital financing activities and what would be in the capital and related financing activities. And when you're ready, come back. We'll look at the answer together. All right, here we are at the answer. A, non-capital financing, $700,000. Capital and related financing, also $700,000. Okay, so let's go to the explanation. Non-capital financing activities include cash flows from grants or interfund transfers not tied to capital assets. So we learned a little bit more there. Here, the federal operating grant, which was $400,000, and the interfund transfer, which was $300,000, is $700,000 total, and that's the non-capital financing activities. The capital and related financing activities include transactions related to acquiring and financing capital assets. So the revenue bond proceeds that are for, the capital asset that they're going to construct that treatment facility, $2,500,000. Then they build that treatment plant for $1,800,000. So the net is $700,000. The customer receipts and the supplier/employee payments are going to be operating activities like we just learned in the previous question. This illustrates, again, how GASB distinguishes between financing for ongoing operations, which is non-capital, and financing tied to long-term capital assets, which would be capital and related financing. So they both have to do with financing, getting money for whatever they're trying to do, and it's outside of the normal operations. But if it's not specifically to build capital or to acquire capital, it's non-capital. If it's for constructing or getting long-term capital assets, then it's capital and related financing. Not too difficult once you kind of think about it like that. Now let's go to the next question. All right, here we are at question 5. What is the net cash provided by or used in the investing activities? Let's go up to the top. The City Airport Enterprise Fund reported the following cash transactions during the year: purchased U.S. Treasury securities for $500,000, received interest income on investments of $40,000, sold investments for $200,000, received an interfund transfer to subsidize operations of $100,000, and they paid $300,000 to acquire new maintenance equipment. So again, what's the net cash provided by or used in the investing activities? So we've talked about the other three activities already, and we've talked a little bit about investing activities. So think about this, come back when you're ready, and we'll look at it together. All right, here we are at the answer A, $260,000 used in investing activities. So let's go through this. Investing activities for proprietary funds include cash flows related to buying and selling investments and receiving interest/dividends. So they purchased investments for $500,000. They had proceeds from the sale of investments for $200,000, and they did also receive interest of $40,000. So negative $500,000 plus $200,000 is negative $300,000 plus $40,000 is negative $260,000. So again, that's the net investing activities. They used $260,000 in their investing activities. The interfund transfer is a non-capital financing activity. We just talked about that. And the equipment purchase is a capital and related financing activity. So those are excluded from this. And, we didn't see anything that had to do with like customer receipts or anything like that, which would be an operating activity. So overall, we've gone over the different activity areas for the statement of cash flows for a proprietary fund. And with that, we've done 5 questions. Now, before we do anything else, let's do one more part of the Superfast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or maybe even 4 questions trying to teach you about how to calculate investing activities or operating activities in the statement of cash flows for a proprietary fund. Whatever the case is, whatever you see in the questions the most frequently, that is what you take out as the pillar topics and you write them out in your own words so that you have an understanding of, again, what is most important. So when you get to the exam, you have already compiled your own personal repository of the most important things you need to know for the exam so that you're ready. So now let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics. Again, these are just the key ideas, simplified, just a sentence or 2. This is how you would do it, but you can write it in your own words, or you would maybe do it slightly differently. Proprietary funds must prepare a statement of cash flows. That's super important. They have to prepare it, unlike governmental funds, and report activities in 4 categories. They report operating, non-capital financing, capital and related financing, and investing. Operating activities include day-to-day cash flows such as customer receipts, supplier and employee payments, and other routine business transactions. Non-capital financing activities include grants, subsidies, and interfund transfers that are not tied to acquiring or financing capital assets. Now, on the other hand, capital and related financing activities include issuing and repaying debt for capital assets. It's kind of in the name there. Purchasing or constructing capital assets, and capital-related grants. So again, everything that has to do with capital assets or capital in general usually is going to have to do with capital and related financing activities. And then finally, investing activities include acquiring and selling investments and receiving interest or dividends on those investments. So again, those are the 4 categories for the statement of cash flows for a proprietary fund. And that is it for this YouTube version of the video. We've only done 5 questions and we did the pillar topics. Remember, Superfast CPA Pro members are going to get access to the full 10-question version of the video when we post it in the member forum. So if you liked this and you want to find out more, make sure you check out becoming a Superfast CPA Pro member. And the easiest way to do that is by actually going to superfastcpa.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, that will give you a much better path to learning about and becoming a Superfast CPA Pro member. So check out the webinar, check out becoming a pro member. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next one.